Welcome back to another episode of Stock Talk. If you guys are new to my channel, welcome. My name is Julie, and in today's video, I want to give you 7 stocks that are currently oversold, and they are all listed in the S&P 500. So these are quality stocks that I'm going to be going over. I am going to be looking at the 3-year history of the chart just to give us a better understanding where the company has been going. And the first stock I want to take a look at is PayPal. If you guys watched my last video, you know that I mentioned that PayPal was about to report earnings, and it did report earnings yesterday. And even though it reported good earnings, it did have a profit per share of $1.11 versus the estimate of $1.12. So it did miss it by a hair, but it did beat sales forecast of $6.89 billion with $6.92 billion. The stock still plummeted. And the reason why the stock plummeted was their 2022 guidance. Now, in my video, I did mention that if the guidance or forecast or the earnings report itself didn't come in great, I could see the stock drop to the 300-day moving average, which is somewhere around 120, 121, which is also pre-pandemic levels before it dropped due to COVID. Now, it didn't drop quite that far. However, if I go on my 2-minute chart, we can see yesterday it was somewhere around 175 when it closed, and after it reported earnings, we can see it plummeted quite a bit and dropped all the way down to 128. It did close at 132, but we can see in after hours it continued climbing down to 128. Now, with analysts giving it a moderate buy rating and a medium price point of 205, I think if the stock can find support on the 300-day moving average, which again is somewhere around 120, 121, this is definitely a great pickup because it does offer you about 55% upside potential. So this is the first stock I wanted to give you guys to put on your watch list. The second stock on my list is Netflix. So Netflix actually reported earnings back in January. They had a very similar story to PayPal where they did beat their earnings, actually the Zacks estimate, by over 62% and had revenue increase of 16% year over year. But they did miss their guidance of adding 8.5 million paid subscribers by adding only 8.28 million subscribers. So globally, they were expected to add 222.06 million paid subscribers, but they only added 221.84 million subscribers. So the price share plummeted 33% to a low of 351, which landed the stock in an oversold area for the first time in 3 years. And we can see that the stock made a rapid recovery and bounce off the 300-day moving average, and is currently sitting right around $429. However, Netflix did lower its earnings by roughly 24% for the next quarter. So I think that's why we saw that drop. And even though the stock made a rapid recovery, I would for the time being add the stock to my watch list and wait for a good entry point. Now, analysts are giving the stock a moderate buy, and we have a medium price target of $521, so that represents a 21% upside potential. And me personally, I would probably wait for the stock to find support somewhere around 380. So that is how I would approach the stock. Now, the third stock on my list is going to be Etsy. Now, Etsy was just recently added to the S&P 500, actually back in September of 2020. So it hasn't been on the S&P 500 that long, and it made an all-time high of $307. Etsy is actually one of my stocks I mentioned in one of my other videos, and I still believe that Etsy is a great stock that gives you great exposure to the e-commerce industry if that's what you're looking for. I even like it better at the current pricing. However, Etsy is reporting earnings as well coming up, so I believe it's on February 24th. So I would wait to see how their earning reports come out. And again, all the stocks I'm mentioning today are actually S&P 500 stocks, and they are potential long-time holds. So even if you guys already own Etsy, for example, and you bought it at a higher price, for example, you thought it found support on the 100-day moving average, and you guys purchased it somewhere around 160, 164, then this might be your opportunity to average down if it finds support on the 200-day moving average. So that is what I would be looking for when Etsy reports earnings, that if they miss their earnings or if they also lower their guidance, then perhaps it might drop to the 200-day moving average, which would be somewhere around 110, 113, somewhere in that range. And that would be a great way to average into your position. But as we can see on the chart, it's almost an oversold territory. So I think if they miss their earnings or the guidance, I would definitely push them into oversold territory. So this is not quite oversold, but we are looking at a 3-year chart, and to be this far down on the RSI, I think this is a pretty good contender. So keep an eye out on their earnings report, which again is February 24th. Now the fourth stock on my list is Generic Holdings, and the ticker symbol for that is GNRC. So this is a stock that not many people are actually talking about, and this stock is currently down 46% from their recent high of 524. And you can see recently it was in the oversold territory, so it's kind of out of the oversold territory, but it's still so low on the RSI, and it's currently sitting on the 100-day moving average, so it looks like it's trying to find support there. And the reason I like this stock is because it's been on a nice steady uptrend over the last 3 years. It did miss earnings slightly this last quarter, which I believe is the reason why we saw the stock plummet or take a correction. However, it's also going to be reporting earnings coming up, which is, I believe, it's February 16th, so definitely keep an eye on for that. The company has currently an outperform rating, and it has a strong buy with a low price target of $350 and a high price target of $575, which leaves us with a medium price target of $476. So that is a 68% upside potential from here. So that's why I'm suggesting this stock to you guys, for you guys to take a look at this and see if this meets your criteria for stocks that you would pick. My fifth stock on my list today is Paycom. So the ticker for that is PAYC. And Paycom is currently down 41% from its recent highs, and it's currently hovering on the 200-day moving average. So it was just in oversold territory as well, and therefore makes it on my short list to watch. It also has earnings coming up February 8th, so that's just next week. So definitely keep an eye out for that. Currently, the analysts are giving Paycom a strong buy rating with a medium price target of $468, and that is a 43% upside potential from here. And we can see, looking at the history of the stock, that typically it always respects the moving averages and bounces right off. So if this is a stock that you are thinking about buying at a discount when it was hovering over $500, you definitely would be getting a nice deal right now, especially if it finds support on the 200-day moving average. Now, the sixth stock on my list is probably a stock that you guys are all familiar with, which is Twitter, and the ticker symbol for that is TWTR. Now, Twitter is for the first time in 3 years oversold and is sitting on the 300-day moving average. So if you guys are looking for a deep discounted stock, a stock that's sitting on the 300-day moving average, I think it doesn't get any better than that. Now, of course, it doesn't mean it can't go any lower, but typically that's what we're looking for, a stock that's sitting on a major moving average. Now, Twitter missed on last earnings here, which is why we saw the drop in the stock, and it's down 55% from its 52-week high. And the company does have an overwhelming hold rating right now with an average price target of $53, which is an upside potential of 46%. Now, earnings is coming up next week, which is February 10th. So I would definitely wait to see what they say in their earnings report. We want to make sure that they don't miss earnings again and what the forecast says. But if they come in with great earnings and also have great forecasts, then if you are able to purchase a stock on the 300-day moving average, then that's definitely a good buy. But again, be sure that you guys do your own research. Don't just blindly buy any of these stocks that I mentioned to you guys. You have to make sure that they fit your criteria and what you are looking for in the stocks before you buy any of these stocks. So this, of course, is not financial advice. I'm just merely trying to give you guys some ideas on stocks that you may have not thought about before. And with that, I want to bring you guys my last stock for today, which is Ceridian Holding, and the ticker symbol for that is CDAY. And looking at the chart, we can also see that Ceridian Holdings is for the first time in 3 years in oversold. And at the beginning of the pandemic, when the company's share price dropped, even then it was almost oversold, but it made a rather quick recovery. And by June, it already made new highs. Along with most of the other stocks recently, it has pulled back from an all-time high and is currently sitting around $78, which is down 40%. Analysts are giving it a moderate buy along with a medium price target of $106, which represents 36% upside potential from here. And they are reporting earnings on February 9th, so that's also next week. So keep an eye out for that, because of course we always want to make sure that they come in with good earnings and their forecast also lines up with expectations. All right, so I hope I gave you guys some good stocks to take a closer look at. As always, this is not financial advice, but merely some ideas for you guys to do some more research on the stocks that you might want to pick. And if you guys got anything out of this video, please be sure to hit that like button, consider subscribing to my channel, and I'll see you guys in my next video. Until then, bye-bye.